Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9, brought to you in association with Bank of New Zealand. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with more weak economic data from the United States. The Philly Fed index of manufacturing output contracted in June. This was a real surprise. Also, a Bloomberg gauge of economic expectations slumped to its weakest level since March 2009. The US appears to be sliding back towards recession. Meanwhile, the Dow and the Standard & Poor's 500 measure of stocks was up slightly, but there are fears about a new levy on bank capital for some of the biggest banks. Basel III has announced or is about to announce an extra 3% levy for big banks. Meanwhile, the Australian stock market fell 1.9% yesterday and the FTSE was down another 0.6% overnight on fears about what a Greek crisis could mean for global financial markets. We also saw weak UK data and that pulled the pound down. There are continued worries about what's happening in Greece, where the government can't agree on cuts to spending, and both the European Central Bank and the European Union are at loggerheads about what to do, whether to restructure the debt or whether another bailout should be arranged. There's fears that this could spread to the other parts of southern Europe with heavy debt problems. All this meant the New Zealand dollar fell briefly to under 80 US cents and is slightly weaker versus the Aussie as well, which means that against the trade-weighted index we're under 70 for the first time in quite some time. The risk trade is certainly off. I'm Bernard Hickey. That was 90 at 9, brought to you in association with Bank of New Zealand.